A tougher environment can be a wake up call provided it does not overwhelm those facing it. Africa has shown remarkable resilience and in recent years has awakened to its potential as never before. Every gap can become an opportunity when the ecosystem has the right growth and development mindset. Yet, familiar obstacles, corruption, cronyism, insecurity, political and social instability, and short term populism, which have long cut aspirations short, remain unresolved. Last week, Nigeria's Federal High Court ordered the final forfeiture of 48 properties linked to former Attorney General Abubakar Malami over suspicions that the assets were not acquired through legitimate income. Let's start with mining. Ghana's artisanal and small scale gold sector could beat its 2025 record after the Ghana Gold Board bought 50 to 54 tons in the first half of 2026. Artisanal miners produced 104 tons in 2025, overtaking large-scale mining for the first time and lifting gold export earnings to record levels. Also, five major miners are advancing copper, cobalt, and gold projects in Zambia, the Democratic Republic of Congo, Ghana, and South Africa. Cobalt Metals and ZCCM1H have begun work on Zambia's Mingomba copper mine. Macor Resources is developing its Zambian copper portfolio. Buenasa is pursuing copper and cobalt refining in the DRC. Typhoon Greenfield is supporting artisanal miners in Ghana, and Gold Ore is progressing gold projects in Gauteng. Better finance, responsive regulation, and technology could turn these projects into measurable gains for host economies. McKinsey, in a recent report, says Africa can turn its mineral wealth into lasting competitive advantage through coordinated clustering, stronger project execution, operational excellence, and technology led innovation. Its research estimates this could unlock $40 billion across the mining ecosystem, lift GDP by 4%, and create more than 3 million jobs by 2035. Other sectors are also pursuing Africa-specific development paths. In Ghana, a proposed Women's Development Bank could soon expand affordable finance for women entrepreneurs. Nigeria is also targeting rising poverty with $3.5 billion planned for schools, healthcare, public systems, livelihoods, community infrastructure, and services. The aim is to reduce poverty, strengthen resilience, and invest in human capital, with benefits reaching citizens through better services and local development rather than direct cash payments. Weak intra-African connectivity remains a major barrier to the Africa Rising story. A recent study says the continent now has a 55-route direct flight deficit, despite rising passenger demand. Embraer's 2026 Africa Connectivity Report says limited fleet capacity, low frequency, high operating costs, and fragmented regulation must be addressed before airlines can deliver expanded sustainable services. Yet these barriers have not deterred potential development partners from seeking a stronger presence in Africa. After talks in Moscow last week with Guinea-Bissau's Foreign Minister Fatoumata Diallo, Russian Foreign Minister Sergei Lavrov outlined priorities for a planned Russia-Africa summit with artificial intelligence, alternative payment systems, and Africa-based fertilizer production central to discussions as Moscow seeks to turn its growing political influence on the continent into deeper economic ties. In Nigeria, Dangote Petroleum Refinery Company executive Devakumar Edwin has confirmed last week that it raised $2.5 billion through a private placement as it strengthens its financing structure. This comes ahead of a planned initial public offering this year, expected to help fund the refinery's expansion as it ramps up operations and expands in domestic and export fuel markets. Nigeria is also banking on stronger, healthier institutions to finance larger ventures and accelerate growth. The central bank says reforms are restoring confidence, with external reserves rising to about $51.86 billion as of July 2026, their highest level in more than 17 years. The Apex Bank has also introduced higher capital requirements for banks and holding companies as financial institutions to strengthen capital adequacy and place the industry on firmer footing to support an ambitious growth agenda. President Bola Tinubu has recently signed the Presidential Executive Order on Virtual Assets Coordination 2026 to align virtual asset regulation, improve cooperation among financial revenue and capital market agencies, protect citizens from fraud, safeguard financial system integrity, and support responsible innovation. Joining us today is Soji Elias, a global markets expert and Chief Counsel at Greyhorse Financial Corp. He continues an earlier conversation on Africa's place in global markets and how the continent can seize rising opportunities as its investment ecosystem becomes more attractive. He argues that the best regulatory and policy environment, whether for banks or other industries, are aligned with development obligations and realities, and not just best practices.
Global financial system or trade system for developing countries continues to be topical. It all depends on at which level. There's increasing talk about ownership of resources in their raw form for utilization in developing economies who are now beginning to take more seriously the burdens of industrialization. Of course, the obvious primary reference is to African countries. I would say it depends on the level, and I'd say that plugging into global finance and plugging into global trade, connected as they are pretty distinct phenomena, distinct exercises. Depends on whose terms. If I can take the either of those areas, trade or finance, depends on whose terms. There is a global financial system, there is a global trade system with its rules and so forth. But, issues of parity and negotiation of terms and so forth, we're never going to be static. We're always going to be involved in an evolution, such as, as I just said, with reference to how the owners of natural resources want to see things happening going forward. One of the emerging issues is that of the robustness of financial institutions in developing economies. I mean, they're light years behind the rest of the global system. A large bank in most African economies is not quite so large when it is placed next to its comparators, say whether in China or in the US. Nigeria, for example, has taken giant steps to consolidate its banks, and I think it's coming to the end of that exercise, the second. I mean, it was a pleasure to have taken part in the first round of this about 20 years ago. And now this phase, the second phase is coming to a close. Yet we read in recent media, financial media, that the enhanced liquidities of these banks does not translate as better credit, whether it's for big-sized borrowers, small-sized ones, SMEs, whatever. It's almost as though there is nothing that can be done to modify that. I've said elsewhere that things like the profit drive of banks is central, critical. Does not exactly compromise those banks if better attention is placed on a number of important criteria. What I would like people to think of, if they would, in this very concise pitch or conversation or talk, is the context of development. Doesn't mean commercial banks or investment banks become development finance institutions, but the context in which they operate their markets are developing markets. Having said that, I think also that we underestimate a bit the scope for regulation, direct regulation if you like, and the scope for policy by which the said banks can be made to address that critical criterion. I'll draw an example from India, where corporate social responsibility is made part and parcel of what the corporates there are about. A certain percentage, 2% thereabouts, of their revenue, the turnover, whatever it is to be directly allocated to CSR issues. I think that that is probably regulation at its best. In this sort of context, it could be better. I think an important way to bring commercial banks and corporate banks in line with desirable targets for most African economies is to align them with their obligations as part of the engine, the backbone of those economies.
Hello, welcome to Global Business Insights, where we offer perspectives to help you navigate today's increasingly complex business landscape. To more stories, this time international headlines. Apple briefly overtook Nvidia as the world's largest company after Nvidia's value fell to $4.86 trillion before recovering to about $4.92 trillion. Apple shares are up 23% this year. And Elon Musk, no more a trillionaire, saw SpaceX experience a sharp market correction just over a month after its historic $86 billion initial public offering in June. The stock is under its $135 debut price, dipping into the low 120s, a significant drop from its post-listing peak. The fall is attributed to several factors, including rising investor caution, cooling market sentiment, and a recent technical glitch. Global stocks on the back foot as investors sold off semiconductor shares, signaling a familiar on and off skepticism about the artificial intelligence boom. Earlier, European and Asian stocks also lower, mostly with South Korea's Kospi down by over 6% and Japan's Nikkei 225 lower by 4%. That's it for this special episode of Global Business Insights. You can now find us on Spotify, Apple, YouTube podcasts, and most major podcast platforms. If you subscribe on YouTube, remember to turn on notifications. Global Business Insights will take a short break and return in September. In the meantime, I encourage you to visit the channel for more topics and guest insights. This is Bodio Shosami. Thanks for watching.